What effect will the Ukraine war have on the stock market? Wisetech has reported better than expected. And the big question is then, when are tech stocks going to make a rebound? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. All right, Paul, the market was a little bit overreactive last night. Dow was down about 600 points when I first started doing my work in the morning. What did it finish?
I think it finished down 480, Pete. I mean, look, I think that's a pretty measured fall given what we've had. And I guess you've got to go back to Friday night, Saturday morning our time when President Biden told us, he expected this to happen. Okay. So far, it's all going according to the form. Russia's sort of put claims on a couple of territories, tell them they can be part of. They should be part of the USSR. Recognise these places in eastern Ukraine.
He's done this sort of thing before, hasn't he?
Then the US comes out with some sanctions. So we punish a few banks. It all looks pretty predictable. I mean. I honestly can't say I'm that concerned, Peter. I think this is, one of the...
I'm concerned for the people in question,
yeah.
But the market implication may well not be all that great.
Yeah, I mean, clearly the market's going to be on edge. And the market's, as you know, always sell first, ask questions later. This has a much bigger impact on the other thing on Europe than it does on the US, Peter. I mean, so I think at some stage we'll get over this, but, it's going to play out. And I would say it's all been incredibly predictable.
Yeah. In today's story on Switzer.com.au, I actually provide a table of 21 very big geopolitical events in recent history, and even going back as far as Pearl Harbor, to be correct. And what we find is the one-day implication of something serious and scary like this is a 1.2% fall in the stock market. And then over time, the drawn-out implication of these geopolitical scary events, the loss of the markets on average is about minus 0.5%. Yeah. And often over shorter or longer durations. But what was interesting was the biggest one I can find was Pearl Harbor. That was a 19.8% fall. But you can imagine that was the start of the war for America. The next one was the Korean War. There the market only fell 12.9% over time. And even like September 11, Paul, was only 11.6%, and that was like New York being bombed. So what the numbers show me is that if America is deeply involved, because the Kuwait Iraqi thing, the market fell fairly strongly as well. But when America is deeply involved, then the stock market's worried. When there's kind of like sanctions and stuff like that, not as much.
Yeah,
I'm not as worried.
I mean, obviously the risk to what I'm saying is this turns into something a lot bigger. Right?
Yeah, exactly.
And that's why markets are on edge. But I think if it's continues along the playbook. Look, you look at the oil price, okay, it's up a little bit, but America's largely self-sufficient in oil. Yeah. So this has a much bigger impact on Europe than it does anywhere else. So,
look, there's going to be volatility. If the thing gets patched up over time, it'll be proven to be a buying opportunity for some stocks. But, I just wouldn't get too panicky about this. Let's get away from the big end of town and go to the smaller end of town. Wisetech reported overnight or just this morning. What was it like, Paul?
Yeah, well, Wisetech's results pretty good, Peter. Some strong earnings growth. Probably most importantly, it's upgraded its guidance for next year in terms of its earnings outlook. Yep. So it last year did the AGM, it's upgraded that. This is all bar unforeseen circumstances. And look, it's a stock that I guess out of our tech stocks, one of the strongest stocks. I've always been a little bit suspicious on Wisetech because there's been so many acquisitions.
Yeah. And there was actually a very unfair report put out on Wisetech by short sellers, and it worked for a while.
Yeah, there has been some attacks, but you've got to hand it to the company. It's delivering it and higher dividend. The market should like this. Probably leads a little bit to what happens in our tech sector, which has still been really hit hard. Yeah. And look, so far, the reports haven't been too bad, so this isn't too bad. I'm watching very closely tomorrow Appen. Yeah. That's tomorrow morning's report to look at to see how that does. So.
Because he's got some challenges with Facebook and all that sort of stuff as well. Yeah, will be very interesting, Paul. And on that subject, let's go to the third one, namely the tech stocks. Are they going to be down forever, or will there be a re-rotation and a rebound eventually?
Look, I think there will be a rebound and a re-rotation. You're going to have to be patient because there've been some massive sell-offs, and you've got to say
huge.
That it's a lot of institutional money re-weighting into other sectors. The so-called growth sectors at the moment, of course, financials, resources, energy. Yeah, but they've had some pretty strong runs,
Yeah.
and I think your article on Monday hit the nail on the head. A lot of that gain's already happened, Peter.
Yeah,
and
the big gains have.
You know, so people will rediscover these sectors, right? It's just a question of it takes a little while. I think there's been a rotation out of the health sector, but if you look at the reports so far in healthcare, you know, CSL reported quite strongly, Cochlear reported quite strongly, so maybe a bit of money will flow back there. I think it will go back into our tech sector, but we'll need, you know, we won't do it until we see a strong lead out of the US. And,
Yeah.
And yeah, but there are some bargains out there, Peter, but you're going to have to be patient.
Yeah,
you know?
it's
Don't
a way.
expect to turn around straight away.
And I think the ducks in a row are going to have to be this. You know, the Ukraine-Russian thing doesn't become a big, large-scale problem. The next one is interest rates in the Fed are measured rather than excessively over the top. And then the third part then is the growth that everyone's expecting post-Omicron will be really sensational. In that kind of context, a growth company will make a rebound. And you can talk...
And on that, you know, some good figures in the US last night, which got ignored. The PMIs are out. They were much stronger than expected. So, yeah, the US economy is growing, right?
Yeah, exactly
Quite
right.
strongly, which is good for earnings. The question is, you've got to get those ducks right, don't you?
That's right. And when as Omicron becomes less of a problem, I think the supply chain impact on inflation will start to dissipate. And therefore, confidence will build. And you're right, people will make a lot of money out of energy, financials, and miners, but eventually they'll take their profits and say, where else will we go? And there'll be some great tech companies that have been beaten up. That is something that will happen later in the year. You're going to have to be patient until then. I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.